Test. Okay. And then I need a new 50K valuation since I passed all the ones I got. The good old take profit trader. Okay. Let's do it. All right, you guys ready? Let's do it. I'm going to try trading NQ. I haven't tried it in a minute. I'm going to try it. See if I can get away with it today. All right, so as always, we're going to start the daily chart. Same process every morning. And the goal is, like, when we look at the daily chart, I am trying to kind of like envision what it might look like later. Like, could this candle end up closing down here? Could it end up looking like that, black? Is that maybe too big of a wick that we would normally see, or is it kind of in line with a possible size of wick, which it's close to probably too big to be a wick? Is this possibly going to be a doji day, like they try to close it with like a more of a doji look to it, like that? Kind of questions I try to ask myself. Right now, I kind of picture it continuing down and turning black. So I want to mark off the previous day's high, because we are one time framing down. We now have 1, 2, 3, 4, 5, 6 candles in a row down now. So the daily high is going to be important. If we get above there, then we can kind of look for maybe a move continuation up into that low, or even that low there. We do have a lot of gaps above us, and I do think that this is a trap. I don't think that price is going to keep going lower beyond here. Maybe after we get down to this level here, maybe, but after that, I think we go back up, and then come after we go back up, maybe up into here, maybe up into there. Then we get the bigger move down. Okay. So next stop is the 1 hour chart, and this is just a market structure kind of thing. Maybe actually, let's go to the 4 hour. I'm kind of curious where the 4 hour strong high is at. So the 4 hour strong high is all the way up there. Two hour as well. And then, so on the 1 hour, the market structure is bullish. That was the last high that led to a new low, taking out that low there. So I want to mark off the last hourly strong low, which would be down here. So we're going to open up right inside of that RTH gap. And it looks like then we'll be gapped up. The previous close was down here, so we'll gapped up. That's important. If we start cooking downwards, that's going to present an opportunity to short to the gap. And then we want to do the same thing for ES. And then I also want to note any, if there was like the previous day, if there was a difference between the two of these candles, but there isn't really. We're both inside days. What about the previous day? So right here we have quite a big cracking correlation here. So on Friday we had taken out this monthly low here, and ES did not. So I know from my studies that anytime there's a high time frame daily crack like that in between these two, that usually we have a multi-day pullback. So maybe my bearish thesis for today is not correct. I'll just have to keep that in mind. Okay, moving on. There's no cracking correlation yet. They both are above that high. I forgot to do the gaps on ES. No bueno. So we had a big gap down Thursday into Friday. Man, I called Friday so well. I just want to note that, like, Friday I called that so well. Like, moved down, fill the gap, and then at early morning reverse that continued. Boom, nailed it. Oh yeah, so there's the gap. Let's see where we're at. Yeah, we're like right there. And then we have this balance area here. Let me make it more prominent. The fill the gap also lines up with the half back there, so I think that will be important. I don't like having the box on my chart, so let me just do this. All right, I think we're good to go, guys. I think this should be a pretty easy. So we have bullish market structure on the hourly, 4-hour daily chart bearish. Let's go to 10-minute now. So if we get an immediate drop, I probably want to be fading it. Like if price kind of cooks down, like this balance area here, I would want to be a buyer here. And that's not a very good balance area. That's a good balance area because the 5 candles out of it are very aggressive. These are kind of shitty. So I don't necessarily want to be a buyer there. And then ES doesn't really have any viable areas that you'd really want to be buying out of here, except for down here. But this is the Asia session move that happened here is lines up with the open, the previous day's close. So that'll be gap fill in that same area. I think that this would be a really high odds target to use for a target. Now, right now we have an SIR happening here into a minute. We have the previous strong low taken out. So I think what's going to happen here is I think we're going to drop and pop. That's my my guess here. So I went ahead and entered here, hoping that we can get some, I can get a scale out first before it tries to open. I'll be really quick to exit it though. Screenshot this for proof. So after it happens, I can be like, told you. For clout purposes. Joking, obviously. All right, come on. Got 1 minute here. Hopefully I can get the scale out in. I would also like to note that ES's chart is way cleaner today. And then this is not good. The balance area there is not been redelivered. So I really don't want to be in this when we open. I'm almost to scale out though. I think I can get the scale out here. If it does bounce from this area, I might try long from there to see if we can get up into 71. I'm taking one off right there just in case. Now I got stopped out. Yeah, that's what I thought. All right. I do want to short here though. All right. I can only short one contract because of the risk there. This should be a pretty clean SIR trade here, I think. Unless they just want to take it up and fill a gap immediately. But I think that'd be too easy for them. All right, ES, still pushing here. Yeah, if ES keeps pushing, there Nasdaq, yeah, there it goes. That's what I thought. There's a broadening formation there. I'm probably just gonna re-enter this, and as soon as ES chills for a second. Almost push a button there. I can't stand that the gap. So we are inside of this gap. I might get out of this. I should have went long there. Now let me mark off where the fill is at the 4 p.m. Because as we studied on Saturday, we found that TradingView kind of lies about the actual closing price. So I want to be a buyer. I don't know if I'm going to get an opportunity to, though. So ES is retracing nicely. Can we just get some kind of retracement so I can put my stop there? That would be great. But we're one time framing up on a 5-second chart, which is pretty savage. I need to also look at ES. You really, because we are bearish, we really don't want to see both. That gap is way off. Yeah, 4 p.m. price is all the way up there. So we don't want to see both these fill the gap all the way. If price is going to continue being bearish for the time being. That's the actual gap. All right, so it looks like ES doesn't want to fill the gap all the way, and then Nasdaq will. That'd be my guess here. If we can just get a retracement back to the previous high here, I'd be about it, but I'm not going to chase it. I was about to buy it right there because it's such a clean little trend there. All right, I'm going to buy right here. There's still 1 minute, one time framing. I did just buy, I just bought stopping action, which is not very, very smart. Finger on the trigger here. I want to be selling stopping action, not buying it. So the target's about where I would scale out here. All right, there it is. Almost there. Take one off right there. Move my stop up to below that low there. All right, pretty happy with myself here because I stayed flexible with it and didn't get wrapped up in the staying bearish. So sometimes I have trouble with that, being flexible with my thesis. So I'm pretty happy with myself on that. It's very important because it's something I've been really on my own thinking about and trying to put some forethought into it before I start trading. Like, this is something I'm working on trying to get better at. So I'm happy with that. I would argue doing that is probably one of the most important things you can do as a trader. Like, actively in your forefront of your thinking right before you start trading, like, what are you actually trying to not make the same mistake? Like, what are you trying not to do again? And if you continue to do that and keep refining and keep changing and keep growing, eventually you'll become profitable. Like, it's only a matter of time. Eventually you'll beat every little quirk you have or error you make. You'll slowly get better and better, and that compounds, and it compounds really quickly. But you gotta accept your faults, which is really hard for a lot of people. It was for me at first. I would blame everybody but myself. It was the chart. It was this. It was the platform. It was that. Like never me. All right. So let me see where we just tapped into. So we tapped into some balance there, and I think that's the fucking price that TradingView puts on its chart. It is. Huh. It is not for ES, so the gap's all the way up there. All right, so that's a almost gap fill. I don't know what to, because it's not actually a gap fill. So, but I don't know. Like I've shorted the levels that TradingView puts on the chart so many times. We just broke a strong low there. Let's look for like a 15-second SIR setup here. All right, as soon as one time framing ends here, I'm going to short it. I was thinking last night, the reason I'm using full-size contracts, I was thinking if I could pull the trigger quick enough, drop down on a lower time frame, get in a little bit sooner, see, it was about $200 loss there, keep my losses smaller, be willing to take a few paper cuts to get the get in. I could make so much more money. And this is how I used to kind of trade. It wasn't until I would say like 6 months ago I switched to micros. So I'm just experimenting here. It may not work. It may bother me too much to take paper cut losses, but like that kind of aggravates me. And it just might not be profitable either, so. All right, there's the Kraken correlation. I pushed the sell button, but nothing happened. Oh, isn't that just beautiful? My computer's lagging. Hello. Yeah, it's not working. It's too volatile for the normal size contracts. And I'm sure this reverses down to, bro. Let me switch back to micros here. I gave it a shot. It's worth a try. This lagging isn't going to work. It's a sell. It's a sell. It's gonna blast me, I think. Yeah, there it goes. So it looks like the actual 4 p.m. price is it's kind of going for you there. So buyers bought, sellers sold. So let me do this. Yeah, yeah. ZS still yeah, so there's your cracking correlation there. I probably shouldn't have shorted that at all. I didn't even think about the cracking correlation until right now. But beautiful gap fill call. I just didn't I caught a lot of it up. I just should have switched bullish quicker. Yeah, so that's the 415 price. 4 p.m. price is up there. So I'll probably do a touch short here as long as ES stays below that high there. If it touches that, I honestly, if it's really bearish, if they're gonna still bring this down, I really don't want to see it fill all the way. Oh shit, I only have $40 of drawdown left. Time to lock in. So I kind of entered there off of, I don't know what told me that it was likely to go down. I think it's the way it reacted there. Something, the price action cued my brain. And I'll just add on more micros as we go down here. It creates some space. That's 1, 2. They almost never, on these pumps, almost never is it 2 pumps. It's almost always, and then this is what I also teach you guys, that this is not the correct structure for a reversal. Like, this would be like the correct structure. While it could, I'm going to be really quick to like into 15 second. I'm going to get out. Yeah, that would be dope, right? But I don't know if it's the right structure. I think this is still trend structure. So at the end of 15 second one time, maybe 30 second one time framing, just in case. So ES totally broke down there. But we're still definitely on the left side of the curve here. Yeah, if that would have been full size contracts, that's $1,000 there. All right, I think if they're gonna pull this up, they got to do it right here. So I would expect what happens on the left to happen on the right here. They might try to break the strong low first, so it's a SIR. They tricked me on that little pump there. They got me on that one. All right, there's a strong low break. It's just so the order flow is really bearish. Probably shouldn't have got out of that. See if we actually get a close above the previous candle here. Nope. Still incredibly bearish. I fucked myself on this big time. Sorry about the language. I'm trying not to cuss either. I top ticket and I get out for no reason at all. It didn't even stop on time framing. I got too busy trying to predict price instead of just trade it. So I'm kind of deserving of this in the moment, actually. Yeah, look at that. Still one time framing. I should be in the trade still. So I got out right there. It's already another 50 points. Okay. Good good learning experience. Not to get overly wrapped up on structure and how it should be. So we'll be studying this trade on Saturday. Oh yeah. Yeah, definitely. Gap fill, cracking correlation. Tis. Yeah, I was just trying to my hope was I could squeeze a little bit more profits by flipping early. But yeah, it is what it is, bro. I'm not too upset with it yet. Now I'm getting more upset. Can you guys believe this? What was I thinking? Nice. What were you guys thinking? You guys were just gonna watch me do that and didn't offer any, like, hey, maybe it's a bad idea, bro. One time framing didn't end, bro. I'm just playing, guys, but it is what it is. Yeah. It's a good learning experience though for you guys, that you shouldn't be too trying to predict price sometimes isn't necessary. It's helpful, but it isn't always necessary. And now we're just one time framing down. Huge gap to fill though. Nice. Good job, bro. You caught the move up and down. Nice. That gap fill is pretty sweet, huh? I call that trading to and fro Yeah, very, we're kind of like the only people in the game that can do it, so. All right, so it's finally testing a strong high here. No cracking correlation. I'd be fine with it as long as if it went up to there, I wouldn't really care. There we go. Nah. Yes, there's no cracking correlation there. That's not good. It broke a strong high. That's a low time frame SIR setup there. ES made a new low though, which creates a cracking correlation at the low. I think I just shorted like the bottom maybe before reversal up. Right back to this weird little trend thing that they got going on here. I really want to watch this here and make sure it doesn't try to bounce. Still 3-minute one time framing though. Alright, so we're about to have a cracking correlation, huh? Come on. So if we switch to regular trading hours, it makes a lot more sense what's going on here. So now we're inside the gap. Like I said in that last gap video, anytime we have a gap and we get inside of it, just like we saw to the upside here, there's always a good chance you're going to get at least a partial fill to the previous high to the left. I know people will be like, it's 50% of the gap, but usually it's just a high to the left that they're not seeing. But I have seen examples that are very precise, so I don't know. I kind of still don't trust just the gap on its own. All right, so new strong high here. Created right there. Redelivered back to that doji, very bearish. Added another contract there, and I'll just continue adding in here each opportunity gives me to get, so I can get my profits back up. So right here is a beautiful example of bearish order flow. So price comes down, comes back up, redelivers right to the doji there, rejects it, an immediate rejection away from it. That's definitely bearish order flow there. It's like what I would like. That's beautiful. So we want to see the same thing here on any kind of retracement. We reject these areas. At least don't violate the 50% of these little baby balance areas. While they're not very good balance areas, they are should be rotated away from and not violated. Better yet, it like just kisses it or gets really, really close within a point. Just like that. That's exactly what you want to see right there. Just kisses it. Super bearish order flow. All right, that's the last add in there. If I do it anymore, I could retrace and I'm not gonna have any room. So I want to mark off any highs to the left here, like this one, because you could get a reaction there. Very nice, very nice. So I had only $43 left in that drawdown there. Makes it a little bit exciting. All right, let's go back to watching low time frame order flow. Make sure it remains bearish. So it's a little bit deeper of a pullback there than the previous two. I think if we drop down to 5 second, yeah. So you can see it's kind of violated that little baby one there. So it's the trend's probably weakening a little bit. It's starting to show some signs of weakening. But still intact, strong high, still intact. It's probably still bearish. It still continues here, but it's definitely something to note. And I want to watch for cracks in correlation on the lower time frame here. Like there's one right there. Because eventually we'll get a higher time frame kind of test of this high. We'll get a test of this area up here. And I need to scale out. I still haven't scaled out here. So I'm just trying to get back some drawdown, which I've done. So ES is testing its low time frame kind of strong high there. I guess that would be the strong high. That's just a doji, but either way, it's kind of testing it here. But still respecting the half back of it. So I'm watching for order flow here to help me know when I should take some of this off and expect kind of like a deeper retracement. Man, yeah, we'll definitely be studying this. Top tick the shit out of that. Called it, gap fill, retracement. Beautifully. Kind of did opposite of how I originally thought. I thought we would go lower and then fill the gap, but yeah, very nice. So again, remember our target from Nasdaq here. It's down there. That's our target. I got distracted, man. Okay. So now we're getting like a 3-minute pullback here. Exactly as I just was talking about. So we should be like a once support turned resistance kind of trade. There we go. With the cracking correlation, ES did not get above that high. Ah, man, I think adding into that again may have screwed me. Almost screwed me. I should have waited for that's a great example of waiting for one time framing to end. I would have just waited for the close there instead of just assuming that that candle would continue down. Waiting 20 seconds is so easy to do. And it gives such a return on time waited that it's kind of silly not to do it. All right, so we're going to test the strong high. It should be about 70 to 80% retracement. There's the 80. Risk it for the biscuit. It's also half back to balance. That's $17 of drawdown left there when I enter that second contract. I think I went over this account, if I remember. I think I still need a couple dollars more on it. Because I think I went over on the first day I traded it. Check that real quick. So 5 out of 5 days traded. No, I'm good. All right, so yeah, tomorrow I'll be able to activate this. This is passed. All right, let's dig out of the hole here. Yay, yay. You got it backwards because you had no doubt. Are you making fun of me? I think you're making fun of me. Hey, it works, brother. Yeah, it helps me a lot, man. I'm so bearish when it comes to trading that it's definitely helping a little bit, I think. It's kind of funny though. Yeah, it's definitely not it's kind of embarrassing to do, I'll tell you that much. Not gonna lie. We just tapped the 10-minute half back to balance. Yeah, no, I agree. It is funny. I would make fun of me if I saw it as well. So I don't blame you. I don't blame you. Hey, what up, Beans? You know, just calling price action like there's no tomorrow. So Nasdaq's kind of lagging behind ES here, which is a little bit this is, I would also like to note, today is not a double tap day. A double tap day would be a day that instead of it would come down here, make one more high, and then go, which a lot of days are like that for NASDAQ, but today is not one of those days. Today is one of these days that if you have a funded take profit trader account, you can make $10,000 on these kind of days today. Because price action is, don't you do it, NASDAQ, I swear. Don't you make me eat my words. That would be kind of funny if it did that. That would be not gonna lie, kind of funny. If it double taps up, that'd be hilarious. I don't think so though. I'm gonna bet not. Yeah, bro, come on. Oof. Down to $3 on that. All right, no more scaling in or out. I'm just going to let it heal itself here, the gap fill. Because that's a long ways down. 3 contracts, 158 more points. That's still not going to fix it, but it'll be close. It'll be $1,000. Put me back close enough for the next kind of session to get at it. I don't think any trader top ticked it like we did. I would argue no one did. I would argue that everyone is so bearish that they are. I know when I saw that douchebag TT Trades post a chart about how bearish it is and how he thinks price is going lower, I was like, oh god, it's going up. You can do that on Twitter. You just take any of those demo traders, and if they make a call out, it's the direct opposite's going to happen. All right, beautiful. Yeah, so ES just is almost to this high. This would be a high that it could see some kind of little reaction from. But you see how we had a reaction at this high here? Like it had a reaction there. These are axes closing a loop. It's the same kind of thing that happens here. Big crack in correlation there. There we go. So I deleted all the highs to the left here. And you see how we cut to that high, we had a reaction at it. Each one of these highs you should get some kind of reaction at. Should, not guaranteed or anything. But all right, looks like I want support. Flip to resistance there. All right, no more adding in. I just said I wasn't going to do it anymore, and I did it again. I have an issue with that when I'm in drawdown. I just want to, I tend to like want to oversize to correct it quicker, but I have 5 days on the fucking account, so there's like no reason to push to get the drawdown back. You know, I don't know why I tend to do that sometimes. Any of you guys do that? Yeah, I think this is this gap fill, and then where's the 4 p.m. price? Guilty, yeah. Isn't it weird how we do that when we got time? Like, there's no like reason. It's not like, shit. I remember when Apex came out with those. Was the first company to say you could pass in 1 day. Oh man, that was an adjustment for me. I blew so many accounts trying to push on. They do that on purpose. It's not that they do it to help us get funded faster. They know that if they allow you to, you'll push. But yeah, you do it too. CJ, Eric, yeah. Surprised no one else. Damn. All you guys, no one else struggles with that? Oh, crazy. Don't want to admit it out loud. I feel you. Another really nice one, support, turn resistance. Really, really clean here. All right, so we're to this next high here. Likely direction. Definitely, definitely struggled with that in the past. Yeah, it's a weird one. Like, what's the hurry? It's 5 days anyway, so. If Take Profit Trader had day one to pass, oh my gosh. That would be like a dream come true. It would not be beneficial for them though because their payout structure. All right, that's a strong high we're testing. Jeez, Louise, not again, dude. I feel like it was stalking me there. Like I legitimately felt like it was stalking me or something. Nice little 1 minute retracement there. I think there's a chance it's going to try to push up to here though. No, no, okay. Ah, tried to trick me. Beautiful redelivery right here. Isn't it interesting how these highs to the left, they act as like um essentially loop closes. When I figured this out, I thought it was so weird. It's definitely very interesting how like both the bounces came after it tapped into these highs, which is very I don't know, I get it, but it's very kind of weird like how it does it. I'm not sure why that it acts as like a loop closing. I'm not really sure. Yeah, yeah. And everyone would measure the gap. This is a good example of it. It just had that bounce, which clearly it's to the tick. You see how accurate it is. But then people would measure a gap, um, and they'd be like, "Oh, it's a 50% gap fill bounce," but it's really bouncing at the prior highs to the left. I think. I mean, I don't have like extensive data or anything to back that up, but I don't know. Loopton has showed me some really convincing ones. Me and him were debating it one time, and he showed me some really convincing examples that were really precise. So I can't say for certain, but yeah, isn't that it's cool, huh, Eric? Yeah, and you could take a trade off of them. Like that bounce up there was pretty fucking savage. 60 point little bounce there. All right, we have a cracking correlation there. ES is ahead of Nasdaq on the way down here. It's retraced all the way to this high here. Let's check the regular trading. You know what I was just thinking? That maybe those highs to the left, it could be that it's that high. Let me check like a 10 minutes, see what it looks like. Ah, makes me wonder which one it is. Is it that half back of that doji that we bounced at, or is it that high? They're both at the same spot. I may just, I'm pretty sure it's the high to the left. But was it? That's funny. See? Yeah, it's kind of, and that's why like VWAP and EMAs, MAs, Bollinger Bands, all those like unprecise ways of looking at price, well, I just don't value them at all. I think precision in terms of a concept and strategy, I think that precision is what should define the risk. Like VWAP, EMA, they may work, but they also are going to cost you a lot of risk to take a trade based off of them. Well, the more precise the concept is, essentially the less risk, I think. That's how I value it. But randomness in price is a conundrum all on its own. Because where recency bias is no joke. Have you thinking this thing's that or it's factual when it's not? I was trying to me and Claude went at it for like 3 hours about balance areas on Saturday. Like we just went around and around about it until I finally shared my screen and showed it the redelivery, and then it was like, okay. But it did not, because I have it set up as like supposed to be like my my co-founder, or so that's what I kind of gave its instructions. So if it's supposed to be honest with me, if I'm like saying something stupid or not factual or wasting my time doing something, it's supposed to like say, hey, and like tell it's not supposed to be like a yes man. And it was like, I don't think that's a thing. And then we went back and forth and went through all the argumentation until it finally came to understand. But it was like it took a good 3 hours of like back and forth. Yeah, that's why I don't like ChatGPT. Sucks. It's just like it'll tell you whatever you want to hear. I'm like, is this a good thumbnail? And it'd be like, it's the greatest thumbnail ever. And I post it and it gets like no one clicks on it ever. But some of its arguments were kind of interesting. Find it. And then, because I was going to make a video kind of like CME proving, but I couldn't. Me and Claude came to the conclusion that I can't make the video to prove it to people that CME controls price without the balance area evidence. It does agree that the IPTA algorithm is a Forex thing, and the whole liquidity thing is not real either. Yeah, the CME thesis was going to be content. Here's the thing, can make every episode, blah blah. Yeah, then here's where it finally agrees with me after forever. But it had some evidence I didn't consider before it came up with on that made sense that I wanted to show you guys. Damn, it retraced all the way back up again. And it did it right at that high there. Each one of these is an entry all on its own though. Each of these strong high tests here is very tradable. Oh no. It got me. So the rule book is where I originally started understanding that what the SMC ICT people believe can't be true is if you start really reading the rule book that CME presents, they're actually very, like right here they talk about, they're very strict on algorithmic, like in what it manipulating price. So velocity logic, this is what I wanted to, I didn't know CME did this. I knew about the velocity logic, but not the 5-second halt. So monitors price moving too far too fast in a micro time window. When the book can't refresh with enough liquidity, it fires a 5-second halt and pushes the market into pre-open state where orders can be placed but not matched. So CME does that. Price banding, every order is validated against a band and rejected if it falls outside of the band. That's the exchange mechanically preventing unfair prices delivery, enforcing a reset that gives participants a chance to re-enter. It is strikingly close to the mechanism you described. Intuitively reverse engineered something real form, but that's not it though. Yeah, I didn't know the price band thing. I was not aware of that. There's something else that it presented to me that's kind of interesting. So I think there's a lot of like everyone's like the market's out to get you. I don't think so. I think it's the direct opposite though in reality. I think in maybe some crypto markets and forex, but I don't think futures is like that. I really don't. I don't think it's out to get anybody. I just think that you might be in its way, and then but I think fair price action looking for something else that's not. Now let's run it back. What do you guys, curious what you guys' thoughts, like what do you think is a good rate pass for evaluations? Like honestly, like not trying to like save face or anything, but like honestly, like if you were able to pass, you know, half, 1 out of 3, 1 out of 5, or whatever it may be, what would you be happy with? Like is treating it like a business wise? Yeah, I think some of them do. I think they have to. How could they not know that with all that money and everything? How could they not know that? It gave me a link to check it out. Let me ask it for the information. Earlier when we were talking about redelivery, CME controlling price, will you find where you got this information and also find me any other information that is along this narrative? But it must be from a reliable source like CME themselves or another institution or a scientific study, something like that. It has to be validated. Yeah, that's a good way to do it. I like that, Jam, and I like that. We'll find out. I'm sure that does have something to do with it. I know what you're talking about. I don't think it's that. I don't think it's the volatility band or anything like that. I feel like it depends on your payout expectancy. Yeah, I like that idea. It's a good way to look at it. All right, so we had cracking correlation. Then could you imagine not knowing about cracks in correlation and then realizing it? It would be such a just a mind blowing thing. I don't remember when the first time I realized it that it was every single reversal, but it must be just absolutely mind boggling to learn of it if you hadn't known. So I would consider this SMC soup here if we break the it's definitely relatively equal highs. So that'd be 6 contracts. And we break the balance area, I'll add in another 4. Move my stop to that high there. Or if it comes back, break even, rejects. Voila. And now I'm only risking 5 points, so that would be... Hopefully I don't get screwed on it and it pop up one more time. Very nice, very nice. All right, scale out time just about. Oh yeah, 32 hour. All right, so cracking correlation at that low there. ES took it out. Nasdaq did not. I should have scaled out, man. Okay, okay. Oh, you weren't here, Eric. I had Claude do some deep dive on my dynamic trade management style, and the results are pretty crazy. I know we did the math on stream like 2 years ago. I went really deep into it, but I had to go really deep into it. It's actually just it's so it's so much better than the normal way to do it that it is you'd have to be almost half retarded not to do it. I made a post about these people that would talk about trading with a 1R a 1R strategy or even a under 1R. And like all these people, I'm like, prove it to me. Someone prove it to me. I know somebody. Cool, but prove to me there's a profitable trader that trades with that style. And they can't do it. No one can do it. They know of somebody, but no one can actually show me the person or show me his statistics showing he actually trades like that. I just think it's absolutely asinine that these demo trading gurus are out here giving people advice to trade like that. It's the direct opposite of how you want to trade. You'd have to be a perfect trader, never make a mistake to be profitable that way. Why would you choose it? Why would you choose to have that trading style and that, like, it makes no sense. Why not be the casino and give yourself the best odds of success rather than not? Like the way I trade, well, I'll show you guys the slides in a minute. But you can have a 30% win rate and still be profitable with the dynamic, with the scaling out and the dynamic one time framing ending. That's crazy. I missed the scale out again. Drop it like it's hot. This is reminding me of last night. I can't find it. There's a price action last night that reminded me how it's behaving right now. Oh, right here. How it kept doing these little shallow pullbacks, like small. It only went like a couple points below the previous low, but then you got a pullback of 40 points, and then it would do that again. So I want to watch out for that kind of behavior here. Hopefully it's I don't think it will because it has that clear target below. Hey, what up, Tate? Welcome, welcome. Yes, exactly. Yep. I would have passed that evaluation for sure. I'm sure you guys have seen like I don't know if you've seen, but like let's say I go into like a tilt state, and I haven't done it in a while, but I did a couple months ago, where I just won't scale out. Like I get in my head that I don't want to, or whatever it may be, and being greedy, trying to hit a 10K day, whatever it may be, and I don't scale out. I immediately start having issues. Like I immediately like start like my trading expectancy just crashes. Whether that be like the mental side of it, or if it's just habit based. I'm used to following a certain kind of process. Um, yeah, see, it did it again. ES just made a new high. What is going on here? Let me look at oil real quick. If oil's starting to crash, it could put bullish pressure on. Yeah, it's doing the same thing it did yesterday. All right, so I added back there on the strong high test here. So it looks like oil's trying to maybe, hopefully this low here holds. We want oil to go up for the indices to go down. With the war back on, I was thinking about this last night after we were done with the stream, how we should have went over oil. If the war is back on, that means oil is probably going to go back to being kind of important, I would assume. All right, this is actually not a bad entry point here for gold either. All right, so I should be able to scale out again. So now I'm gotten 2 trades out of the same position, right? So I'm pretty much rolling, like I'm doubling up. If I hadn't scaled that, I don't want to get in. I went into a rant about this last night. I don't want to do it again. But I don't think there's anybody watching last. I think there's only like 3 because I did it so late. There's only a few people there. Kinda, except for I have like a dynamic extra exit strategy that allows me to stay in trades. I wouldn't. What would you guys say my style is? I wouldn't say it's scalping by any means. Kind of, but kind of not. I don't. I don't know. I wouldn't say it's scalping though. Just because my average risk to reward is yeah, that's a good way to put it. I wouldn't say it's day trading either. I'm not holding all day. My average hold time is like 6 minutes. So I guess you could call it scalping. Yeah, you could. I'm not like swing trading. I'm not quote unquote like trading in a trade all day or anything. I would say it's swing like pure price action and zone to zone kind of trading. That's a good question. I don't really I don't have to think about that. I know how to explain it. I just don't know how to like what a category I'd fit in. I don't know if I necessarily fit in a category. Kind of like a hybrid category, maybe. Yeah, I like the fluidity in the surfing. Yeah, yeah. I think Jammin and Eric said it pretty well there. All right, there we go, guys. Bam, money in the bank. Show you what you drink. Shit, I don't know where it's at. Hold on. Ask Claude what to do with it. You guys really should download Claude for your computer. It's absolutely amazing. All right, there we go, guys. Beautiful. Let's check ES. This area up here on gold kind of worries me. I don't really like how it's reacting here. Save my stop and just concentrate on Nasdaq here. Okay, so we're still in the gap. We should get hopefully a continuation and fill this in here. All right, so new strong high, low time frame strong high here. If it's bullish, this is where it's going to bounce at because it just redelivered right here. Like it just redelivered that completely. So I think this is a good spot to pick a line in the sand here. Like I know I'm dead wrong if it goes above this high here. It's not much risk. We are at what? It's the turnaround time. Uh-oh, I forgot about that. And we're at the turnaround time here, so. All right, so I can scale out, add it in right there. Beautiful trade. Ching-ching. All right, almost at max profit here. Go ahead and take off half right there. So I got, let me turn on the executions, see how many trades I got out of one trade here. Okay, so that's pretty amazing, right? So you got one, scale out, two, scale out, three, scale out, four, scale out. So I got 4 trades in one. I've recycled my trade 4 times. I've made 4 trades in the same trade, 4 in 1, which you can't do that if you don't scale out. So people that are, I'm telling you this because a lot of the reason people don't scale out is the greed, right? They don't want to miss out on the potential profits of keeping a full position size. But that doesn't make any sense when you can do what I just did here. And also the dynamic exit strategy, like using one time framing once it gets to target, is going to allow you to get extra profit that makes up for any of that you give up in the beginning. Yeah, that's yeah, I would say that's one of the best points about it, Tay, is the most people out there trading with Nasdaq now, Nasdaq zones of 50 to 70 points. My mine average right now it's probably like 20 to 30, but it used to be 6. before the expansion and the volatility. Like the ranges right now are amazing. Like this is like our heyday right now. I think we will look back on the ranges that we have right now and think of them fondly. I'm pretty sure. Just because of how just incredible the ranges are, how big the ranges are. And it keeps getting bigger. Our study session was showing $10,000 trades from entry to target. So with 2 contracts, which is pretty crazy. All right. Oh, I'm at max profit. I gotta get out. I'll keep 1 contract on just for fun, but I'm at max contract, max size there, max profit. All right, so 2 passed, 1 halfway. My goal was to get 5 passed by the end of the week here. Last week I wasted all of last week not taking it serious. Kind of just goofing around with it, which is kind of I don't know, last week it was kind of weird how the week went by for me. It was Thursday and I was like, oh no, it's already Thursday. I wasted a couple days. Have you guys traded the Coinbase or any of those other prediction markets, like the 15-minute ones? I'll have to make a video for you guys about them. It is extremely easy to predict the next 15-minute candle, and the way that those options work, I didn't realize they're kind of like options to me. The way that they it's almost like the way that they behave is very much like a covered call or covered yeah, it's because it has a max upside, but the way it behaves is very option like. So even if price, like the 15-minute candle's already started and it's clearly going down, you can still get, like, you put $100 in, you'll still get $60 of profit, which is kind of crazy. I was playing around with it this weekend and I made a bunch of money just kind of like just experimenting with it. Because if you look at like a 15-minute candle, how often do they change directions? Like once it started going down, like it's not very often. Once a 15-minute candle like pushes down, not very often it ends up being like a doji or something. Not, 1 out of 5 maybe times. Which if you kind of think of that in trading terms, you'd be correct. If you wait 2 minutes for the 15-minute candle to form, or 3, and then you have a 1 in 5 of getting it wrong, and every time you profit, you make 60% gain. You can still make a lot of money, even with $100, because you would be right 4 out of 5 times, so you'd make $400. Or no, you make, let's say you make $50 per trade. So 50 times 4, you make $200 of profit when you were right, and then the one you got wrong, you would lose 100. That's the only issue with them, is because of the way it works. Like like if you enter in and it goes against you, like price moves against your, the way it works is like this. So you have the 15-minute timer starts, And then you have whenever the 15-minute timer starts, above, below. So if you get it right and price goes below where you, like you said, price down. If you get it right and price closes 15 minutes later below that level, you win. If it closes above, you lose. You can go up or down. But the problem is, like 5 minutes into it, if you thought it was going to go down, it was down. If it then goes up, that $100 could be like $40 or $30. Like instantaneous. That's only the way the risk management works with it's a little weird. But even if you like, let's say it went against you and you got out immediately, you could like fix that to where you'd only lose like maybe I don't know, half of this or something. So then you would still make $150. I think for a low risk, that's pretty good returns for a low risk kind of strategy. And then I was also playing around with it. So you know how usually 15-minute candles have a wick? Almost every 15-minute candle is a wick. So if you enter in on the wick, you put up $100, you actually make $300 if you're right. So that would probably be the way to do it. But with the redelivery, it's almost guaranteed money, guys, is what I'm trying to get at. I'll have to make a video about it. It's pretty cool. But they only have it for Bitcoin right now. Eventually, they'll probably have it for Nasdaq, I would assume. All right, let's talk about the risk management. Let me move this out of the way. Yeah, so it looks like we're definitely filling the gap here, right? And that's not the right one. Try to make this bigger so you guys can actually see it without having to cover up the trading screen. There we go. Okay, let me find where it explains what we're doing here. Okay, so the testing here, how I tested this. Same entries, every trade taken by both. Same stop, a $200 max loss per trade. Same exact win rate. Same exact identical trade selection. Same account, 50K account with $2,000 drawdown. Same instrument, MNQ'd, commissions included. So pretty much the only thing that changes here is the exit and the scaling out. I didn't include saving my stop or any of my other rules. So I'm not sure what it meant by 33.18. I think it says break-even win rate gets cut nearly in half. I think that's what it's saying there, is that 33% of the time you would get a scale out, and then if you were to move your stop break even, that would only be successful 18 times, but I'm not sure about that one. Okay, 24 versus 10. That's the amount of losing trades you could survive before the account is gone. So with the dynamic, I need to give it a name. Anyways, just a JKT dynamic trade management style. You could take 24 losses in a row if you got a scale out before you would blow up. Traders who ever reach a payout at a 30% win rate. With the JKT style, it's 100% versus a static trade management style, all in, all out, 2%. Pretty big difference there. You can be right more than half the time and still lose money. With the other strategy, the reality, it depends entirely on how you exit, blah, 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 blah. All right, so trader A is all in, all out. Enters 2 contracts, sets a 2R target, exits everything at target, or takes the full stop. 2 outcomes only, either plus 400 or minus 200. I would say that this is how most traders trade. They'll even watch price come within ticks of their take profit and then watch it go all the way against them. I watched a video of a dude lose $40,000 when he was just up 100, but he just let it almost hit his take profit and didn't do anything. So I'd say that this is probably how most people are taught to trade and how they do trade. Okay, so I scale out and let the rest run. Enter 2 contracts, takes 1 off at least 1.3, and I didn't even consider the like it could be over 1.3. I just went with the static 1.3 for just to make it easy to test. So when I take 1 off at 1.3R, I make $130, and then I hold the remaining of the $100 risk remaining, and then 2R or better, and then scale out at the end of 1 time framing. So once I scale, a loss turns into a win. The trades will still stop me out, and I still make money. So trader A, all in or all out, he will make $1,600 on 10 trades. Whereas I will make $1,900 in the same 10 trades. So here's a comparison. That's plus 340%, $340, and that is a 21% increase in profit. 21% increase in profit. With prop firms making it so hard for us to make money these days, and removing the likelihood of passing and getting payouts because they're just like squeezing the chances of success, is a very low percentage now. A 20% increase in your profit is probably going to make you profitable if you're close. A 21% increase in expectancy, 17% less volatility in your P&L, 1.5 times risk adjusted. I'm not sure what it means by break even win rate. Oh, okay. I get what it's saying. So it's saying what percentage do you need to win to break even? Break even win rate. Um, so that would all in, all out is a 33% win rate to break even, not to make any money. With the way I trade is 18% win rate. So imagine like that. It's just such a, like, it's huge difference, guys. So here's the expectancy per trade, and you see how the higher the win rate, that just the expectancy gets bigger and bigger. Okay, so after 50 trades, all in, all out, max drawdown $800. Over here we have plus 400 was the max drawdown. Worst 5%, 4,400 of profit. Worst 5% of profit, 4,400, 6,800. So advantage is over 50 trades. That's an extra $1,710. How many losing trades before your account is gone? Here you have 10. The way I trade, you get 24. It's just crazy. So if you on that, so the scaling out, on average, if you take it together in all the trades, on average, your average loss is decreased by it's decreased by almost 2 times because of scaling out. And the average stop out for this dude is 200. The average stop out for the person that scales out is 85, because you're not always going to get a scale out, right? In a perfect world you would, but this is not a perfect world. So everyone gets a cold streak. This is showing here that risk of ruin, trading all in, all out, is almost, you're like 100% guaranteed to blow the account, just about, over a large set of trades. With the scaling out, you only have a 26% chance. Percentage of ever get paid. Oh, this is the win rate. So you have the win rate, and then percentage of chances of getting a payout. 30%, 100%, 100%. You don't really actually have a chance with the other strategy until you get above 50%. So you will start getting payouts with the way I trade. It's pretty extreme. At about 120 trades, you will start getting payouts. With this way, you don't start getting payouts until trade 350. It's 3 times the trades, 3 times the amount of time spent, and 5 times the amount of eval fees. 5 times the amount of evals, 3 times more trades, and 3 times the time. Like it's crazy. Yeah, so same trades, same 30% win rate. Who gets a payout? 100%. JKT style does. Only 2% the other way. Half of your losers pay you with the way I teach it. Your drawdown lasts 2.4 times longer. You buy fewer evaluations. And there it says at a 60% win rate. This doesn't make that much of a difference, but it makes a big difference at the lower win rates, which is important for people that are new and learning, because let's face it, when you're new and learning, you make a whole bunch of errors. I still make a whole bunch of errors. My win rate is not 60%. It's like 52 to 56, somewhere in there. Sometimes I get it as high as 62, but it doesn't stay there for very long. So here's how to do it. Enter with an even amount of contracts, 2 being a minimum. Take off half at 1.3R. Use the measurement tool. Leave the stop where it is. Do not move to break even ever. Hold the winner for a minimum of 2R. Exit on a end of one time framing, not a fixed target. Never set take profit orders. And this is including, I had to include the times that, I even had to include the times where one time framing ends, but it doesn't become out, it doesn't and benefits you. Like, it doesn't benefit the risk to reward. So it would be, these numbers would be like so extreme if I didn't include that, but that wouldn't be honest and fair. So I even had to include and add in a percentage of trades where it's less than 2R on the final trade, because one time framing, hit target, one time framing started, and then the immediate candle or two after that, one time framing had ended, resulting in an earlier exit less than 2R. Leave the stop alone. Moving to break even after you scale destroys the whole edge. The plus 30 outcome is what doubles your survival. So instead of the full loss, you get plus 30. That's what makes the big difference. It's the guarantee of profitability on a trade that you would otherwise take a full loss on. This is modeled by my own trade distribution, not a universal claim. 200,000 simulated trades, 1,500 simulated trades per data point. Yeah, so pretty undeniable. But I guarantee a large majority of you guys listening right now will not do it, because there's a subset of people are not willing to do they're not willing to do anything. It's just how it is. It's the way I found it. You could provide people with proof like this of something that is undeniable, would help them and push them towards their goal of being a trader, but they are unwilling to do it. It's just how it is. I would say it's a large number. I would say 70% of people are unwilling to do anything. They're just not willing to do anything. They won't change the way they've been doing it. They won't check their stats. They won't study price action. They won't do the course. They just won't do anything. And it's just they're hard-headed. I was probably the same way. That's why it took me so long. It's unfortunate because the people that the other like 30% that take advice really well, are willing to try things, their learning curve is so much faster. But even with the evidence, I would imagine that only 2 out of 3, maybe 2 out of 10 people are going to implement it. But I would argue, if you're one of those people and you're like already thinking you're not going to do it, I would argue, why not just try it? Like, what's the worst for trying it? Like, if it doesn't work for you, so what? Then move on. Then I'm wrong. But I would just try it, guy. Like, what do you like? Follow my 5 rules and just try it. Like, just try it for 3 evaluations and see what happens. So save your stop. Don't try your hardest not to allow it to get hit. And that means like a tick, a point below, like as price is coming into your stop. You guys saw me do it as much as I can today, because you never get out where it wants you to get out. It always taxes you an extra $100 or $200, honestly. So even if you're only trying to like with 2 contracts, full-size contracts, if you're trying to only risk $100, you're going to end up taking a $300 loss on every stop out. So save your stop, plus it removes emotion out of it. That's why I have it, to avoid, well, it helps me avoid tilt. Risk a max 10% of drawdown. I tested this too with a sliding scale, and it gets even more extreme how well it works. So sliding scale, you can take like an unreasonable amount of losses. So sliding, I'm not telling you to do it with a sliding scale, but whatever your max losses in the account to begin with. So a 50K account, that'd be like $200, $250. Pretty easy to follow. To do that, you need to, I would actually have a 6th rule I'm probably going to add. Scale out at 1.3 R. So we already went over that. You guys saw me do that all day today. Use one time framing on 1 minute once target is reached. Just let it cook. Let the market make you more money for no cost or energy to you. This also helps with tilt and fear of missing out. Every single rule I have helps tilt more than anything. It has benefits of risk to reward and helps your stats and expectancy rate and all that. But they are, the whole reason I built them was to help me stop going into tilt. Just save your stop, 10%, 1.3. I'm forgetting here. I'm just drawing a blank for some reason. I just thought of it. The one I had there is old, and I don't really agree with it anymore. Oh, use one time framing for entry as well. So don't enter until you see the previous candle be taken out, which will improve your, so this improves you, like, check it. This improves win rate. This improves reward. This decreases risk and improves win rate. This decreases risk. This decreases risk. So you have decreases risk, increases reward. Combined, like, you saw just one of these, just the two of just scaling out and just where's the reverse button? Let me delete the lines here, they're bugging me. Okay, there we go. So just this one and this one increased profitability and chances of success by 21%. Imagine all the, I'm going to do it after we're done with here. I'm going to do it and see what it looks like. Imagine all these put together. So you 40%, 50% more likely to be successful, 70%. It's hard to say because this one is huge. And then just the chances of you going into tilt is so drastically decreased by following these. So if you want to be profitable and you're not, I would say follow these. And if you don't, then you know why, right? Like I'm giving you like the keys that took me 4.5 years to figure these rules out, to dial them in. And I'm giving you the keys here with the strategy, with everything you need. I would just try it. Like, that's all I ask. Just try it. And I have more rules, but I think these are like the must do kind of thing. I would also argue don't watch any other people that are teaching trading. Don't do that. And don't trade any other strategies or methods while trying mine. Give me a fair shot without the outside influences ruining it. Yeah. You guys got this. Everyone can do it. If I can do it, you can do it. Like, there's nothing special about me except my obsessive ass nature. I would say that's the only thing, and maybe my pattern recognition, but that doesn't have anything to do with trading per se. I probably arguably have a worse issue with tilt than you do. I would say it's more problematic for me. And if you're struggling with tilt, like if you're going into tilt and blowing up all your accounts, nothing I teach you is going to help you, because tilt will stop you from, you won't follow a strategy. You're not going to, oh, that's the other rule. I almost forgot. So the other rule is don't trade for more than 45 minutes at once. Don't trade for more than 45 minutes without at least a 10-minute break. No buttons break. Like let your brain heal, because you run out of mental fortitude. And that's what I've went over this a million times. I'm not going to do it right now, but people think it's over trading that causes tilt, when it's actually time. It's a time-based thing. It has nothing to do with how many trades you take. Obviously, if you're like one trade only, like that, yeah, you're probably not going to go into tilt. But I mean, I think it really, like, if you're actively trading and pushing the buttons a lot and making a bunch of decisions, maybe more than 5, I would say that it's a time-based thing. All right, I'm gonna go ahead and get out of that there. It's coming back to that strong high. It probably still continues down, but my voice is starting to go out. So do you guys have any questions about the 5 rules here, guys? I'm gonna try to put them in importance of order here. Yeah, that's tough. Both those, I would say that. No, like 45 minutes without a break. Let's get the, yeah, let me clarify that. So, trading acts on your ability. Let me just show you, like, it'd be easier. Oh, I forgot I had a whole fucking course about this. Kind of blonde today. So avoiding tilt is non-negotiable. Tilt definition, I mean, like emotional decision making under stress. Core philosophy, every rule is designed to keep you off tilt. These are like the 5 rules we just talked about. So the whole time thing, it's because of this right here. So you start trading, you're like, no emotions, nothing's wrong, right? Within 10 minutes, you take your first trade. 20 minutes, you take your first loss. Cortisol, which is a chemical you release when you're stressed, is active, which decreases testosterone, increases anxiety. And it also affects your ability to make choices and decisions correctly. In 30 minutes, let's say you take another loss, you then go into 45 minutes, you're going to be releasing cortisol and adrenaline, which is like double time on your brain, decreasing your ability to make decisions. And then because right here you start losing your ability to make the right choice because of the cortisol, right here. So right here, if you're having a losing session about 30 minutes, your ability is starting to decrease very quickly. So your ability to make the right choice, save your stop, exit, when to trade, how to trade. Each trade you take has a lot of decisions to it. You may not think it does, but you are making quite a few decisions. So it decreases your chances to make the right one, just the ability to do it. And then you introduce adrenaline into your bloodstream as well, more. And then which leads to more mistakes, which leads to even worse trading, which leads to full-blown tilt, which is kind of like a altered state of mind. It's a change in perception. It's why it feels like everything was a blur when you did it, like why you blew up all your accounts and you don't know why, like why you made the choices you did. When you come out of it, it's almost like you're sobered up. That's why. So quit trading after 30 minutes and take a 10-minute break without looking at the charts. It can be any 45-minute window period, 30 to 45-minute period. Just take a break where you're not taking buttons. Like, just, you can even be looking at the chart, just like move the mouse away from you. Let yourself just like not have to make a choice for 10 to 20 minutes. So I have a chart in here that shows how our ability to make the correct decision starts decreasing. So like if you think about your brain as a bank of knowledge and whatever, like it is, you do reach a point where you kind of max out. So this is a study they did on I think it wasn't traders, this study here, but it was a study on some kind of, I can't remember what they did for a living, but some kind of position where they had to make really high level choices and decisions very quickly under stress, similar to trading. So we have proportional favorable decisions, on the left. And then we have time on the down axis here. So what they found with their employees is that as their day started, they make the right high level decision almost every time when they start. And then as time passes, the favorable decision that they're able to make almost goes to zero before the first break. This is also why your work makes you take breaks. It's not because they want to make you take a break. It's because they know your ability to work increases if they allow you to take one. So then and it's exactly why it's 10 to 15 minutes long too. When I read the study, I was like, oh my gosh, this explains so much. Why workplaces give you breaks, and then also why taking a break and walking away from the charts and coming back makes such a drastic difference, and why it helps you avoid tilt. And then they take their break, and then the ability to make the favorable decision spikes right back up to where it should be. And as time passes, it decreases. And while time is passing, they're having to make a lot of choices under pressure. And then again, they take the afternoon break. It goes right back up and then decreases over time. Same thing with trading. The longer you trade without a break, you taking the favorable position, making the right choice on strategy decreases. So if you have like a balance area and prices coming up to it, and you have to judge to where you should draw the lines, or where you should put your stop, or where you should put your target, or where you should get out, just think that if you've been trading for 30, 45 minutes, your ability to pick the favorable choice is going down. So you're more likely to get stopped out. You're more likely to take a losing trade the longer this goes. And then add that into all the other, add that into cortisol and adrenaline. And then this just becomes like a spiral of death that I feel like traders could really avoid. But you don't want to, because trading's addictive. So a lot of you are like, la 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 la, have your make believe fingers in your ear, zoned out, not listening right now, because this is the last thing your brain wants to hear right now is like, oh, the thing that I love that gives me dopamine, I can't do forever. It doesn't want that. And then the 5 rules are made to help you not go into tilt. But yeah, so it's a time-based thing. If you don't stop here, you're pretty much, I noticed in my own trading, if I don't stop here at 45 minutes and I'm having a bad trading day, I'm screwed. I will go into tilt. Not so much anymore. I've almost just about, I would say like a month and a half ago is the last time I did it, but I used to do it every day. Every single day, I would go into full tilt mode, blow up every account, just about every day for a while there. Maybe I get lucky and like have a good couple days where I didn't struggle at all. And finally get a funded account or whatever, and then whoop, back into tilt, blow it up, and then in every account I have. And I did that for months and months on end without like just like crying in the bathroom, frustration at work, just so busted up and broke and hopeless. But it wasn't until I implemented the 30-minute rule and set a timer to where I actually had to get up and go get it. It wasn't until I did that that I actually finally started getting payouts. Oh, that's good. Yeah, isn't it weird? He said I had some training on this when dealing with teachers. As the day continues, the number of decisions taken mount up and they become triggered easily. Yeah. Do you have the study on it? I can't find that study I found. I would look. I have the study on the cortisol and adrenaline and the testosterone decreasing, but I can't find the study on the timing. Oh, was it? Yeah. Yeah, I got you. But yeah, it's real. There's no, like, I don't know as wise humans. We're just not made to make like the same decision a million times. Trading's stressful. Our bodies handle it like a lion is chasing us for some reason. I'm not sure why, but it does. Hey, tell him, bro. No one said anything. I think CJ said there was some dude, but I didn't ever look. That's a pretty crazy bounty, $1,000 to find somebody that does it like I was doing it at the open. That's a pretty crazy bounty. Alrighty, guys. So let me give you those slides so you can take them with you. I think I figured that out. What do you mean? It's not the right. Well, oops, the right thing to do. Hey, there we go. And then you can also take this one. This is all in the course that you guys all have access to. So you guys all have access to the Market Master, not the Market Master, the Risk to Riches class. Risk to Riches, not Risk Rags and Riches. Totally different. Once you realize that risk, the reason I named it that is because the association with risk should change eventually, where you understand that risk leads to money, and the only way to get rich is to risk more. But it's all in here, every PDF you want down there, but these are the rules there. And I also made a new video on my VTF channel that goes over price action that I think would be helpful for a lot of people. It's not, I know it looks like it's very beginners, but it's not. It's learning advanced price action. I cover like 5 phases of price action. It will be kind of mind blowing, I think, for a lot of people because, uh, like the way I explain it in here is very, very simple but very powerful. I would definitely check it out. Alrighty, guys. I will see you tomorrow. Let me go ahead and schedule it now for forget. We will do the New York opening tomorrow as well. Hopefully you guys made some money. Hopefully you made something, and hopefully something I taught you today clicks and it helps you in your trading endeavors. I'll see you guys in the charts. Peace out.